What's up, guys? Welcome back to the channel where transparency meets trading. If you're new here, my name is Tiana, and my goal is to share my true and transparent Forex/futures trading journey. So if you want to follow along, don't forget to like, comment, and subscribe below. But for today's video, I'm going to be talking about why I am no longer trading prop firms. And at the end of this video, I am going to go into our weekly trade recap. I did catch a great setup, but for the beginning, I want to try something a little bit different in a setting that's a little bit different. The weather is not that great out here, but I did want to get this content and this topic out to you guys because I feel like my personal reasoning could be something that someone else can relate to. So let's get right into it. So the first reason that I decided I will no longer be trading prop firms for the time being is because I had to sit down and check myself and ask myself, what is my current desire at this point in my trading journey? Am I desiring to make money right now, or am I desiring to become a better trader? And I feel like your answer to this question is very important because it will determine your actions, your emotions, and how you progress right now in the market. If your sole desire right now is to make money, the way that you trade, the way that you revenge trade, the way that you hold trades, or whether you're trading out of FOMO or fear, all of that can be affected and increased just because you're desiring to make money right now. Versus on the flip side, if you're just desiring to become a better trader, you're not worried about those trades that you're missing out on. You're just solely worried about, am I implementing my system every day in a manner that I can analyze? What's wrong with my system? Is there anything I need to fix in my system? What can I do to work on my psychology? Am I executing my trades in a manner that is better for me? Do I need to change the way that I'm executing my trade? Just anything that contributes to your process of becoming a better trader. And I feel like it's important to know this answer because that will help you decide. And it also helped me decide, okay, what will be more beneficial to me right now? Having a prop firm account where I'm more so worried about trying to grow that account to 10K, 20K, and this and that payouts, or having a personal account where I can just gradually grow, where I'm not really too much worried about the number, or I'm not really too much worried about the payout. I'm just worried about having an account that I can use to implement my trading system and go off of. And that leads me into the second reason as to why I decided I don't want to trade prop firms right now, which is FOMO, the fear of missing out. And not so much as the fear of missing out on a trade in the market, but the fear of missing out on success and money in the field of trading. When I first started getting into prop firms, the first one that I personally traded was the Funded Trader. And they used to do this podcast series where they would bring in some of the successful traders that they had and sit them down and just talk about the different things they experienced in the market and their success. And I remember seeing one guy who had a 10K payout, someone else who had a 20K payout, and there was another person that had over 100K in payouts. And so that kind of created a unrealistic expectation for myself. Not saying that I'm not capable or I don't have the ability to do that, but it made me feel like, hey, I want to be the next person that's sitting on that couch making this amount of money. And so it made me feel like I had to take action and take part in the prop firms because I didn't want to miss out on that opportunity of making great money. The reason that most people do participate in prop firms is because of the lack of capital. And for me personally, it's not that I didn't have the capital. I was just so eager to get to that success and that amount of money so quickly rather than taking the time to build up my own personal capital in my accounts. And I think that's something very important to consider when you're choosing to trade a prop firm, especially for me, because I had to ask myself, am I trading this prop firm because I see someone else doing it and making a whole lot of money? Or am I choosing to indulge in this business or trade this prop firm because I feel like that's where I'm at in my personal journey? And so I think you guys should consider that as well when asking yourself whether or not you want to trade a prop firm. And that leads me into my third reason as to why I decided not to trade prop firms, which is patience. I think a lot of people underestimate, including me, the learning curve that trading really takes. Yes, of course, people can develop a strategy in 2 to 3 years, but after you develop that strategy, you need a couple of years of experience in the market. And that's just something that you cannot bypass as a trader. I don't care what people try to promote out here on these markets. A lot of people give you these unrealistic expectations just because they're trying to sell you a course or just because they want you to buy their product. But the reality is Trading takes time, just like a undergraduate degree takes 4 years, and then you have to go and get a job. Most of the time, before you get that job, they want you to have experience. So just because you have the education, just because you have the degree, that doesn't mean that you have the experience that you need in order to be successful at that job. It's the same way with trading. Just because you have this education and you've developed a strategy does not mean that you have the experience that you need to go and apply for this job at a prop firm. The same thing goes hand in hand. And I think for me, I realized that I have to be patient on my journey. I cannot bypass the process of what it takes to become a profitable trader. If that means that I'm just getting $100, $200 payouts right now, that's fine. My problem is that I was trying to skip to the point where I'm now making 10K, 20K payouts here and there without even appreciating the little money that I'm making from these small accounts, from growing my own personal capital. And I don't mean little money, because sometimes I need to check myself as well as when I say that, because these $100, $200 payouts that I'm making now, that I'm taking my time, that's paying water bills, that's paying light bills, that's paying phone bills. And when I get to the point where I'm taking $1,000 payouts and $2,000 payouts, that's gonna pay car notes, you know. So it's like not thinking so small and trying to run a race that I'm not currently in, and just making sure I'm staying in my own lane and appreciating the journey and appreciating those small wins as well. So I know that was a lot to ramble about in that one point, but it's about to start raining out here, so I'm trying to speed up. So now we're going to get more so into the technical sides of why I no longer want to currently trade prop firms. The stuff that I talked about before, those were my deep psychological reasons, all the deep shit. But now we're gonna get into the technical stuff. So first and foremost, I trade both Forex and futures. So I'm going to address Forex prop firms first, then I'm going to address futures prop firms. With Forex prop firms, this year and last year, there has been so much uncertainty with them. People have been denied payouts, and not just people with small accounts. People in the trading business that's been in this game for years are getting denied these payouts. They're not getting their money. People are losing accounts. I personally lost a 50K funded account with TFT. I also had a $700 payout that I never got to get. And so it's just like there was too much uncertainty for me in this unregulated market by the US. You have to understand that certain things in the Forex space is not regulated. And for me personally, I didn't want to keep paying for these challenges, keep putting my time and effort into something that I wasn't going to be for sure was going to be here for the next 2-3 months, you know. So that's just that. I have decided that I'm just all around chilling on the Forex space as far as prop firms go. If there is a prop firm that does come about and it does very well, I need to see that prop firm stand up for 2 years, at least 1 year max minimum, before I invest my own money into another one. Next we're gonna get into futures prop firms. Now, futures prop firms, I do like them a little bit better, and that's because they are regulated by the US. Futures is an industry that is regulated, so that gives me a little more comfort knowing that my money is going into something, you know, that's regulated or can be backed up. And with that being said, because of this regulation, a lot of these futures prop firms have been in the game for years, such as Apex, Top Step. And then we also have the new ones that are coming along, My Funded Futures. But the first two that I mentioned, they've been in this game for years. So that gives me a little bit more comfort, like I said earlier, with putting my money into these companies, because they've been around for years. Whatever system that they have in place, it works. They're getting people their money. And that's what's most important to me. Next, the thing that I did like about futures prop firms was that I only needed to gain 8% on my accounts, or a low amount on my accounts, in order to pass a challenge. With Forex prop firms, I needed to get 8% on the first phase, and then I needed to go back and get another 6% or 10% and then 5%. It was just a longer process. And with futures, I could be a one and done. So that was the reason I decided to start trading with them. And then, so next we're going to get into the downfalls of futures prop firms and why I stopped trading them as well. And number one is because of the monthly payment. Unlike Forex, futures, you have to pay every month that you don't pass that challenge. So for example, you may pay $230 to get the account this month, but if you don't get that 8% within that month, you have to pay $230 again within the next month. Some of them have situations where you'll get the next month free if you remain in profit, but that's not all of them and that's not a guarantee. So that was a big thing that I didn't like. Also, trailing drawdown. The trailing drawdown is basically where after your account goes up in profit, that drawdown follows it. Even if you go back down with your account, that drawdown is locked in. So that was one thing that I really didn't like. I learned to get around it. I feel like if you are a consistent trader and you are a consistent profitable trader, that isn't something that you need to worry about, especially if you know how to manage your risk. But those two things, those were really minor. I wouldn't say minor, but those are small things that I was worried about that I got around. But the biggest reason, beside the psychological things, that I decided to no longer trade futures prop firms is because of the fact that I cannot hold my trades overnight. I am not a scalper. I am a day trader, which means I am taking my setups on the 15-minute, 30-minute, and I'm holding them for a couple of hours. There may be some times where I get a trade in the morning, where I get a good buy or a sell, but the downfall of that is I can only most times hold it for a one-on-one. For me and my trading plan, my profitability comes from getting those big moves, hitting those setups where I can hold it for that 1 or 2 and that 1 or 3. And I feel like that's the case for a lot of people. Yes, you can be profitable with only one-to-ones, but you're so much better off looking for those setups where you can get those 1 or 2s and 1 or 3s. And for me personally, the time frames that I trade on require me to be able to hold those trades overnight. There would be some situations in futures trading where I would lose a trade for the day because I wasn't able to hold it. And then the trade would go in my direction, not hitting my stop loss, but hitting my TP the next day. And that was something that was just really irking me. And for me, like I said, it's important for you to implement your system and being able to analyze your system and critique your system. But I personally can't critique my system in that way and don't want to critique my system in that way, especially if it has been working for me outside of prop firms. That's just something that I'm not willing to go in on for right now with my trading journey, because I feel like I'm missing out on a lot of setups and a lot of money that I could be making because I'm not able to hold my trades overnight. So I hope that these little tidbits helped you guys a little bit with your own decision of whether or not you want to trade prop firms. Again, these are my personal reasons. I'm only sharing them with people because maybe some other people can relate to them. Maybe you may want to sit down and take a look at yourself and your own trading plan and ask yourself, what's best for me right now in my journey? So yeah, that's the reason that I wanted to share. But without further ado, as promised, we're going to go get into the charts and recap the trades from last week. And we're back in the lab. So let's get right into these charts. If you are new here, please do not be alarmed by these colored trend lines and all of these different colors. The reason that I mark up my charts this way is because I trade based on market structure. And I know sometimes that can be confusing for some people. So I want to make sure that I have it marked out on my chart so you can follow along with exactly what I'm doing and what I'm explaining. So everything on my chart is color coded. Anything or any structure in the 4 hour is going to be color coded in purple. Anything in the 1 hour is going to be color coded in blue, and anything in the 30-minute is going to be color coded in orange. But now that I got that out of the way, again, let's get into it. So first, let's start off with this 4 hour structure. As you can see, 4 hour structure is currently going in an uptrending market. It has not broken this recent low. So we're going to assume that it's in an uptrend. And as I determine the trends of the market, I'm going to label them in this box. Another thing here on this 4 hour that we can see is I have a green box, red box, blue box. And for those of you who don't know or who have not been watching me, this is something that my mentor Jessica Lane teaches, and it's where price comes up, pushes and test a zone as resistance, comes down, pushes through, breaks through that zone, which is represented by this red box. The resistance was represented by the green box, and now it comes back to test this zone as support. So this gave me a confluence or an incentive as to why I felt like price was going to shoot up from here once it hit this point. Next, we are going to go down to the 1 hour. And as you can see, I currently have my 1 hour trend, which is labeled by these blue trend lines, thick trend lines, going in a downtrend. So we're going to label this downtrend. And along with the 1 hour going in the downtrend, I am going to tell you why I feel like price was going to shoot up from this point or start to trend in an upwards direction after this. So if we were to put a fib on here, I also trade based off of fib levels. Fib levels is basically where you judge how far price is going to go in the future based off of how far it pulled back. And so you can kind of see right here that on this 1 hour fib level, price pulled back all the way to the 38.2% and pushed to TP1. Normally, if you've been watching me or my mentor, you know that once price pulls back into these certain different levels, depending on which level it pulled back into, it's going to go to hit either TP1 or TP2. And for this situation, I was expecting it to hit TP1 and then possibly a strong possibility of it reversing. Now, what kind of confirmed my confluence of reversal is because right here, I see that price is diverging downward, which means that whatever the price is doing on the chart is doing the opposite on the divergence chart or RSI. So you can see right here, price is kind of going in an uptrend, but right here, price is going on a downtrend. So not only did I have, like we said, the 1 hour diversion, it also hit a TP level. So for this, to me, this was an influence, or not influence, but a confluence as to why I felt like price was going to shoot up for the week at some point or eventually. So now that I have my bias for the market, what we're going to do is look for the entry. And so now we're going to explain my entry. And we're going to go down here to this 15-minute. And let me finish marking off this 30-minute structure so you can follow along up there. We can take that off so you guys can see. So right here, you can see that I have my 30-minute structure going in an uptrend. Let me find that box, drag it right here. So we're going to label this as an uptrend. So this is my first confluence as to why I took the trade. Me personally, with my trading plan, I don't trade against 30-minute structure. I know some people trade, on these smaller time frames, 15-minute structure, 5-minute structure, but for me, they're too sporadic. And so I like to trade something that I feel like is going to maintain that structure or maintain that trend. And for me, 30-minute structure is very consistent. So I don't trade against it. That's unless it's just a reason that has a lot of great confluences as to why I would do that. Other than that, I typically don't. So as you can see, 30-minute is going in an uptrend. So that's my first confluence as why I'm looking for a buy. My second confluence that I had as to why I took this entry right here is you can see again, we have a green box, red box, blue box. Price came up, tested this area as resistance, broke through right here on this red box, came back down and tested as support. So this was my second confluence as to why I should take this trade. Next, you can see that this thin blue trend line, this was a 1 hour trend line that I had going from this lower high to this lower high, and then I dragged it all the way out. And you can see price tested the backside of it right here. So once price came right here again to retest it on top of this green box, red box, blue box, this was my third indication to me that price was going in an uptrend. So I already have three confluences as to why I took this trade. My last and final confluence is based off of, based off of my fib levels. So as you can see right here, even though before price had hit TP1, price had not yet hit TP2 on this 30-minute structure. Now, although that is not always guaranteed, I had three other confluences telling me that price was going to continue to push up. And because price pulled all the way back to this 78.60% fib level, this indicated to me that price was going to push forward or catapult forward to this TP2. The farther that price pulls back, the farther that is going to go in the future. So these were all of the four confluences as to why I took this trade. I got in this trade about 7:45 in the morning. The reason that my stop loss is this wide, which is 30 pips, is because anytime I trade a trend line that is a 1 hour trend line, I typically give myself about 25 to 30 pips because I know sometimes the market likes to come back and retest these higher time frame trend lines, or it likes to breathe around them a little bit. So I like to get it up. I like to give it room to do so. This is personally what's in my trading plan. You do what's best for you. If you want a tight stop loss, by all means, do what's best for you. But this is what works best for me. And so once you come right here,
you can see that news pushed price all the way up. Now, once price got about here, I think I had like a counter trend line on the 15-minute right here. Once price reached up to here, I wasn't sure if it was going to push back down. So I went ahead and took some of my profits and I moved my stop loss into profit. So I took partials and moved my stop loss into profit. And then after that, I just kind of waited for the trade to hit. Now, one thing that I was unaware of was news coming out at 9 a.m. I thought that I had checked news the day before, but I did not. This was a downfall. I make mistakes as well. And so price pushed all the way up. And because I was not aware news was coming out, even though my alerts was going off, I didn't catch it quick enough to go ahead and secure my profit. If I was aware that news came out, I would have already set my TP right here. And further pushed my stop loss into profit just to prepare for it. So once price kind of came back down again and fluctuated, I got out. I only end up getting about 5% of my account profit because of that, when I could have got the full 10%. But it is what it is. You live and you learn. I know next time to make sure I know what's going on in the market. And then let me guys show you it on my account. So right here, you can see that 840 is where I took my partials at. And then the 4094 is where I took profit at. I didn't end up getting the whole 100. This is $1,000 account. I only risked 10% per trade. So I end up getting about 5%, 4% of the account, which is cool. I'm fine with it. That news really could have wiped me out and went the other direction. But because I was able to predict my bias, predict the direction of the market, news just went ahead and pushed it in that direction I already predicted. But anyways, that is going to be it for this video. I really hope that you guys learned something, whether that was helping you make the decision to trade a prop firm or just learning a little bit in the charts. If you want to see more content like this, please comment down below what you learned or what you would like to see. And don't forget to subscribe. And that is going to be it. Tiana's out. That shit kind of corny. Don't tell nobody.